U.S. stocks dropped sharply on Tuesday, helping gold extend its gains. Joining me now on the line is Bill Baruch of iiTrader. Bill, good to have you back on the show.
Thanks for having me on again.
So, Bill, as we're speaking, the Dow has slid triple digits on earnings and durable good numbers, helping the gold market. Bill, how do you see the market set up this morning?
Well, we're watching the S&P closely. The halfway retracement back from the recent highs here in the last couple sessions comes in at 2016.5 in the S&P. The S&P is almost down 2%. It's about 1 3/4 right now. You have to watch that level on a closing basis. And the real beneficiary, it's been gold today. Gold, $20 off the lows. Durable goods was a major miss. Revisions were a miss. There was a segue into that from the miss with Caterpillar as well. And the sentiment's pretty poor, though consumer confidence this morning was just a blowout number, a lot better than expected. So right now, I think there's a little bit of worries around here heading into the FOMC. And again, gold has benefited from that with the weaker dollar. Now, is it really the miss in all these economic data points, or is it the major resistance? And I'm leaning on it being the major resistance in the dollar. If you look at this 10 to 12-year downtrend in the dollar, halfway retracement is 96.17, and we got within an eyelash of it over the past couple sessions. So we're seeing a pullback from there and a capitulation in the euro off of Sunday night's lows of 111. So we're starting to see a reverse. There's a massive short position in the euro, and I think that is what's driving the market. And you got to continue to watch the euro very closely. There's a major trend line from the December highs in the euro that comes in just below 115, and if the market gets out above there, you can start seeing a short covering rally in the euro, and that's what we're really watching very closely right now.
Gold indeed the beneficiary this morning, Bill. And before we talk more about the metal, I need to ask you about the snowstorm, which has affected New York, and many were anticipating thinner volumes in the markets due to the storm, and for this to spill over perhaps in Chicago. Have you seen less volume this morning?
No, not at all. I mean, we're built for it here. I mean, but we haven't seen much more than a dust. The weather, a little cold, so it's not affecting trading here at all. And really, I mean, outside of the exchange in New York, I mean, everything's really done electronic. So, I mean, some volume, a little bit less. Maybe some buyers weren't there in the equities to step in on the lows. But I really don't see it being much of a hurdle at all.
And of course, the big news of the week, the FOMC, which concludes on Wednesday, and traders will be looking at that meeting for clues as to when the central bank will begin to raise interest rates. But the question is really now that Europe has announced QE, can the Fed make a move?
I think this meeting is going to be, a little bit of very quiet. I don't see any major changes in Fed policy. I don't see anybody stepping out there and making any major statements. I mean, I think a lot of worries have been soothed from the ECB, and they're not going to do anything to change that for now. If the equity market as well, it's already 2% off of the swing highs from after the ECB, and I don't think they're going to make any talk about raising rates this year. We really don't anticipate rates being risen until possibly 2016, and I don't see the Fed coming out and saying anything that's going to change the course of that and really put pressure on the equity market after the ECB came in and stepped in and made things look a lot better.
All right, let's wrap with silver now, Bill. I love how you summed it up earlier, saying silver Pac-Man the week longs overnight, but the metal has since rebounded.
Yeah, silver had a real sharp dip overnight, cleared out some stops, and reversed higher. I mean, it's a market that it isn't for the weak of heart. I mean, it's a market that if you're in it, you're going to expect some big moves, and that's what we're seeing. So we're pressing higher. The 200-day moving average comes in about 1850, a major retracement level at 1880. And if gold gets out above 1300 again, then that's when silver is probably going to be testing those levels. So you got to keep an eye on that. But again, with gold and silver, as soon as you get excited for these, that's really the time when you want to be selling it. So you want to step into the long side very cautiously at these levels.
Thanks so much, Bill. And for all of our viewers, we'll see you tomorrow. Thanks for watching.